record. Okay. So welcome, Alex. Thanks very much for coming from Hilton Baird to talk about this subject. This is recovering debt and managing credit risk in the credit climate. I'm driving the slides, so if you want me to move on, Alex, you just have to give me the nod, and today I'll be your beautiful assistant. And I apologise for the printer that's going in the background. My wife is clearly printing something. I'll hand over to you, Alex, now.
Thank you very much, Chris. Thank you, CICM, for the invitation. Obviously, we've got to know CICM a lot better over the last few years since Vic joined the business 3 years ago as director in our collections business, and also since we started working more regularly with Sharon as well. So we've got a lot better insight, and are delighted to be able to support CICM wherever we can. So I just thought it would be worth, by way of introduction, just giving you kind of a bit of background in terms of how we got into collections and credit management, just to really set the scene a little bit. I think it's kind of important in terms of the context of the crisis we find ourselves in at the moment. And if there's any questions, as Chris said, as we're going through, just please raise your hand. Chris, if you can see everyone, just then interrupt me and let me know, and I'll kind of stop, and it'll be good to get a breather. So, how do we get into?
Sorry, Alex. Alternatively, we can you can put a chat in the chat box as well. If anybody doesn't want to raise their hand, we can do it through chat as well.
Okay, perfect. On the screen. So, how do we get into credit management and debt collection? It's not really a career that I thought I'd end up in when I finished my degree in French and business studies, having spent kind of several years in Marseille, selling myself and learning all about ways of life in France. But like many things in life, we can blame our parents. And basically, my father, who I co-founded the businesses with in 1997, used to run his own manufacturing business. And during the last recession, so going back to the end of the 80s, if I'm completely honest, didn't really know a lot about credit management, and like many entrepreneurs, was caught in the trap of chasing turnover. And during that, basically started using invoice finance to fund his business. And unfortunately, during the recession, took £250,000 worth of bad debt in terms of having sold to a man in a van who basically would fold the company, set up the next day, keep his stock, and then carry on trading. So he went through an insolvency process, lost his business he built up over the previous decade, and under his personal guarantee, had to assist the finance company collect in his ledger. So very quickly, he went from being an entrepreneur running a business to having to help the bank who lent him the money against his invoices to collect in that debt. That's probably the luckiest thing that ever happened to us as a family, because he ended up spending 10 years working for that finance company, basically doing all of the workouts. So whenever another client would enter into an insolvency process, Dad would pack a suitcase, turn up at the client, and basically within 24 hours have to understand the credit management and function of that business to allow him to assist the bank in recovering all of the money that was due to them. So I grew up kind of in my teenage years listening to all of these amazing stories of turning up with admin receivers on the door at dawn to printing companies and manufacturing companies all around the country, and just saw the real sharp end of recoveries and collections. So together, when I finished university, Dad and I kind of hatched this plan that we'd set up a business between the two of us, which I started in '97, and then he joined me in eventually in 2001 once we got the business kind of up and running. So really, it's a story of, I guess, poacher turned gamekeeper, but I think still provides us with a huge competitive advantage when we're going into situations to work with businesses, because we've been on the other side of the fence compared to many, certainly accountants and insolvency practitioners that we kind of rub shoulders with, who you know, they have a very strong professional background, but may not have been on the other side of an insolvency themselves, or been in the situation where they've had those sleepless nights of customers not paying them, debtors going bust, and just really kind of worrying about the survival of the business. So hopefully it gives just a bit of context in terms of kind of Hilton Baird and I guess where we've come from. So we grew up on collecting in insolvent ledgers for banks and insolvency practitioners. But over the last decade, we've really grown our corporate debt collection business for live clients, as well as our confidential credit control business, where we step into the shoes and assist credit managers, on an interim basis or on a whole outsource basis to kind of recover their debt on a confidential basis. As I've said, we belong to the Hilton Baird group of companies. We also have a brokerage which raises finance for owner-managers and corporate companies, and an audit business that the lenders, and you'll see some of them at the bottom of the slide, use to actually go in and check that companies have the right credit management procedures in place before they get lent to on an invoice discounting or a asset-based lending facility. So week in, week out, we're going into hundreds of businesses across the UK and actually kind of health checking how robust the credit management systems are to be lent to by invoice finance companies. So I guess it's in the backdrop of all of that kind of experience over the last 23 years that I'll share with you kind of what we're seeing at the moment during this crisis in terms of debt collection and credit management. We're also delighted to have been voted 2 years running the best third-party debt collector by the CICM. So thank you again for all of your support. So I think, Chris, we can go to the first slide. I think having dipped in and out of several of your kind of presentations over the last few weeks, there have been lots of kind of graphs and stats around, and I've come across this business, Side Trade, recently. I don't know if anybody on the call uses them at all or is familiar with them.
Yeah, I think most of us probably know who Side Trade are. Them. Yeah, software and outsourced collections provider.
Yeah. Okay. So really interestingly, some of the stats that they're putting out, because they have I guess a vast database of invoices where they're kind of experiencing overdue and late payment on them. And this sample across several countries we'll see kind of over the next couple of slides is made up of 26 million invoices in aggregate, 54 billion euros worth of transactions across 3.7 million buyers. So it's probably one of the largest samples that we could certainly find available in terms of public information about payment trends at the moment. And what it clearly paints as a picture across the UK, but also across Spain, Italy, Belgium, and kind of the Netherlands, is that since we've gone kind of into lockdown, and various countries obviously went in a little bit earlier than us, that there's been a real uptick in terms of payment, overdue payment. So debts being paid beyond due date. And here they're measuring anything which goes 10 days beyond due date as being an overdue invoice. So in the UK, the data is showing that 53% of invoices now are going beyond due. Chris, if we can have the next. So similar picture in France. There's kind of been a bit more of a steady increase, where they're now up to kind of 36% of all invoices being paid beyond due date. Chris, next one. And again, in Italy, which is, I guess, notoriously bad in terms of payment terms, or certainly length of payment terms, again, a real kind of uptick in terms of late payment of invoices. So I think often on the news and things, we can get kind of very caught up that we're in the center of this current crisis. But I think certainly with the lens of credit management, it's really worth always remembering that this is it's a global pandemic, and it's leaving kind of no country, and therefore no, I guess, credit ecosystem kind of untouched by its effects. Chris, next slide, please. So the deteriorating picture is not being helped by some very well-known names making some very knee-jerk kind of decisions around how they're treating their suppliers, and many of them are getting quite adverse press and publicity, quite rightly so, on the back of it. And I think it's important that, and we'll come on to it a bit later, that on the flip side of this, many companies, larger companies out there, are actually looking to protect their supply chains throughout the crisis. And it's been encouraging just to see how many, I guess, webinars there are, not only about late payment, but also on the flip side about what people are doing to protect the supply chain. So I think some of the bad behaviors are being counterbalanced by by some good behaviors. It's really interesting. We've through our membership with UK Finance, which is the umbrella organisation for all of the banks, but very importantly in this context for all of the invoice finance companies in the UK, have some kind of insights into data that they're recording on a weekly basis. And I'll share some of that kind of anecdotally with you at the moment. I think that industry, I mean, many of you will deal with, or maybe use yourself, but you'll deal with debtors who use kind of invoice finance, and those businesses tend to be very kind of cash hungry, and that's why they turn to that type of finance in the first place, to fund the working capital. But UK Finance are reporting that there's been a 30 to 40% drop in invoicing of their members since we've gone into the crisis. So you can see just how hard hit many sectors across the UK have been in terms of a drop in turnover. So it's going to be a massive impact later on down the line, especially for those businesses where the lifeblood of their cash flow is drawing down against those invoices that they sell to an invoice finance company. If they're not generating in the first place, later on down the line, they're just not going to have access to the working capital that they would have had previously as their main source of finance.
Yeah, and that's a good point there, actually, Alex, because as it says, 30 to 40% drop in invoicing is interesting itself. But of course, invoicing sort of finished end of March time, and then April was still a good collections month. There was cash available, so they were doing it. Now we're in the middle of May, so those 40% of organisations that haven't been invoicing are the ones that are now scrambling around trying to keep the lights on and do the cash. And your point earlier that you made about some of these organisations that jumped too early, that made decisions too early, we've known one organisation that's been on these calls that actually furloughed all of their salespeople. And of course, now that they haven't got any cash coming in from billing from April, they can't actually resolve the disputes because they haven't got the salespeople there to help them to do that.
Yeah.
So it's jumping too early has been a real problem for some organisations.
Absolutely, and we're seeing that jumping too early being, I guess, one of the main impacts that we're facing when we're picking up the phone to chase debt is just the lack of people there, and we'll talk in more detail kind of about that. But coming back to just kind of some of the members' views from UK Finance. So in terms of what they're seeing, and I guess mirrored probably by what you're seeing, food supply and kind of healthcare sectors, remaining very strong and invoicing kind of holding up, along with interestingly lots of DIY firms who are selling online have been doing very well kind of during the trading period, and also they've reported that chemical suppliers have continued to keep kind of invoicing well. So areas, and I guess probably unsurprisingly again, where where sectors are struggling. Traditional manufacturing, obviously construction, but fingers crossed might pick back up again, kind of with the slow return to work from sort of the beginning of this week. Recruitment agencies, again, sector dependent, because if you're recruiting and supplying into kind of logistics, healthcare, drivers, then probably you're doing very, very well. If you're into other areas where staff have been furloughed, then again, a huge probable kind of issue.
On that point, my son works in the recruitment business in IT, and what he's recruiting for now compared to a month ago is very different. He's doing much more support desk staff at the moment than he is for programmers. Yeah. So it's people sort of can't plug into their laptop from home. Those are the sorts of guys that he's recruiting, but the actual programmers doing stuff on big projects and ERP implementations are not so.
And this again, I think, is why it's so difficult to pull any meaningful trends out of data which is available, because even within any sector, there are winners and losers depending on which side of the fence you sit on and where you sit in the supply chain. So it's really hard, I think, to draw meaningful insights from, I guess, just global trends, and probably quite dangerous to do so. I think you kind of at the moment have to dig really down into the detail of each particular case and your own situation to really understand what, more than ever, what's kind of happening. And I think it goes without saying, obviously sectors such as tourism, hospitality, retail are probably, bearing the brunt of the crisis.
We've got next week we have Catherine Bailey on from Valor Hospitality to talk specifically about the hospitality business. We thought that would be an interesting one. We've also had the NHS Northern Ireland come talk to us about what they're doing as well. So we're trying to keep. So next week will be quite interesting to hear what Catherine Bailey has to say.
Yeah, interestingly, NHS, we had an inquiry come in from the NHS yesterday where they are surprisingly reviewing some of their credit management, and they've worked out that they've got a lot of money owing from the private insurers, where private patients have come in for operations which they've undertaken for them, but then for whatever reason there's been a disconnect in terms of the money's been billed, and some of the debts I looked at were going back to 2013 in terms of unpaid invoices into leading kind of healthcare insurance companies, which we're hopefully going to get appointed to assist them with. So yeah, I think people are taking, obviously, where they have time to look at old and delinquent debt and see just where it can be now kind of resolved and collected in. So if we can go on to the next slide. So again, stats from UK Finance, where the average kind of for anybody using factoring and invoice discounting in the UK in terms of debtor days outstanding typically is around 55 days in terms of normal terms. The UK Finance, the factoring company, is quite proud of this in terms of using it as a I guess an advert that factoring and invoice discounting can help kind of the cash flow in your business, because it wraps around, I guess, a set of good credit management principles and basic disciplines that you need if you're going to receive funding against an invoice. You have to have most of the tenets that you as credit managers would expect in place to be able to draw down against that lending. But that said, there has been a small uptick in debtor days, but maybe not as bad as we would have expected yet. And I think there's anecdotally there's also lots of kind of debtors out there who are just doing very counterintuitive things to the supply chain, and I just hope that when we come out of this, those suppliers and hopefully those who survive will have long memories and won't just chase the the next order and the next piece of turnover, and will actually remember just how fairly or not they were treated by the by their customers. It's very difficult to kind of to say that when you know you need to make the next sale to fund your business. But when you hear of, certainly within the retail sector, we're hearing lots of unilateral decisions around discounts being taken up to 40, 50% of kind of invoice value, debtor days being pushed out from 90 to 180 days, just unilateral decisions. It just doesn't feel right that kind of in the long term, those customers should be allowed to get away with that type of behavior.
Absolutely, and it's interesting. Next week, I'm speaking twice. Next week at the Accounts Payable Appreciation Week. We're working with them at the moment, and I'm talking about the Prompt Payment Code amongst other things, that's going to be quite interesting. I'll probably be a little bit like, as I've said before, Darth Vader in the Rebel Alliance. They're not going to like it when I sort of stand up as a credit manager talking about this kind of stuff and that they should pay promptly. So it's going to be quite an interesting conversation next week. But you're right that we have seen a number of areas where that has happened. Atul, if you can hear me, it's because you're in the fashion business. Have you and retail business? Have you understood this to be the case? Have you seen this? You're probably on mute. Is he still there?
He's gone dark.
He's gone dark. Okay. Well, he's missed his chance now.
He can't talk, but he's going to type, he says.
Oh, okay. He's going to type. Okay. He's probably got stuff walking around the background. I'll pick the message up and relay it in a second. Okay. Sorry. Carry on, Alex.
But I think, hopefully in the backdrop of that, there's also been some good news this week in terms of the credit insurance announcement. I think kind of overdue, because many countries in Europe had already come out and and kind of given support to their local credit insurance providers. But hopefully you're aware of the move. But the government essentially, and the details are yet to be kind of fully published and fleshed out, but the government have set up a reinsurance scheme which will allow the UK credit insurance on UK limits, but importantly also on overseas limits, to maintain those limits during the COVID crisis, and they're expecting it to last probably through to the end of the year. So, it means that if you're sat there with a credit insured limit at this point in time, our understanding is that, the reinsurance will allow the providers in the market to maintain cover critically on those customers. I don't know, Chris, if you've had anything directly from the credit insurance or the government on that.
You're on mute.
We have had TL Dallas, Sarah Aldridge talking about credit insurance the other day, and that's again on the YouTube channel. It was about a week or so ago, so it was before all of this kind of thing kicked off, really. Right. So the stuff's changing so much. I think we probably need to get somebody back from the insurance industry to sort of talk about that as to how it's going to work and what their views are. We'll probably do that in a couple of weeks' time. But yes, we are obviously aware of what's going on. But yeah, it'll be interesting to see how it pans out. Of course, when the government say, hey, we're going to support them, it means that you and I and us and on the call are going to support them ultimately. So we'll see how it all goes, really.
But I think what it does do is it just hopefully continually lubricates that credit chain where, often there's a house of cards. If somebody has one of the leading buyers has the credit insurance pulled, and we saw this kind of many times over in the financial crisis, then the knock-on effect through the supply chain can be absolutely devastating. So hopefully this will just continue to kind of allow credit to, if they can continue to be supplied, continue to sell, allow credit then to flow kind of downstream through the supply chain.
Atul, are you able to talk now? The question was about the retail industry and these sort of unilateral decisions being made.
With the retail industries, there's actually a number of challenges, and the most standout challenge is stock. Most of the retailers have seasonal stock, and with seasonal stock, where the lockdowns happened, the suppliers are stuck with stock. they can't sell.
Yeah.
Now,
Yeah.
the challenges on the retail were prior to COVID, where many businesses were struggling. Yeah, and as a result of COVID, you know, that's not improved, it actually got worse. So a lot of the retailers out there was, you know, are sort of had a bit of a day of execution. So once the lockdowns lift, you'll find that many retailers just won't pay, can't pay, and they've utilised the funds. Now the surplus have got different issues in that the product they've ordered for summer is past cancellation date. So this specifically are not taking this stock. At the same time, they've placed orders for winter, and these goods have got to be paid for. So the wholesalers have got a whole myriad of challenges. When you look at a set of financial accounts and you look at the cash holdings for a wholesale business, that is not there anymore. Reason being is they've got to pay for new season stock. And if the new season stock doesn't come in, you know, they're just not going to be able to supply retailers. So I see a lot of small SMEs going out of business, take as much as they can, and then close down. But those that are savvy have switched to online. Now, Joe Public aren't really going out, so they're not buying flash clothes, you know, wearing joggers. So that's the other challenge. I think we sort of this lockdown, although it's been 2-3 months, will put the fashion business out, or retail business, at least 12 months.
Okay, thanks, Atul. So essentially, what you're probably saying is we'll be wearing swimming trunks and bikinis on Christmas Day then.
Well, just ask Charles to stand up, and you'll know.
Okay. Okay.
Next slide, please.
Yeah, thanks.
Yeah,
Atul.
there's some suspicious Hawaiian shirts in Charlotte's wardrobe.
Okay, go ahead, Alex.
So just really to share, I guess, some of the experiences that our team are having. So we have 75 people full-time working for us across the group. About 35 of those sit within our collections business, and within the collections business, we haven't used the furlough scheme at all. So we've got everybody working from home. So yeah, like many of your credit teams, we face that daily challenge of kind of running a big team remotely, and it's been one heck of a learning curve and I guess experience. And I think it's highlighted to the team just how much they love being in the office. So I think as soon as kind of lockdown lifts, then what we're hearing week in, week out is just that they really miss that that kind of interaction that they have day to day with their with their teammates. So kind of from top left all the way through. So yes, we are seeing debtors use the current kind of crisis as an excuse. I mean, we always kind of talk about the can't pays and I guess the won't pays in terms of when we pick up the phone and get through to somebody. With the can't pays, I mean, businesses were under huge amount of pressure. Back to Atul's point, before the crisis. So these conversations were difficult kind of anyway, coming on the back of a lot of uncertainty over the last couple of years, not huge level of growth. So those conversations have got even harder. And we found it very useful where people are saying they can't pay, just to try and upskill the team as to some of the options that are available to debtors in terms of the support which is there. Be that kind of through the CBILS, the bounce back schemes, the deferments. So just to be able to signpost those debtors, but probably more relevant to be able to challenge them when they say they can't afford to pay, just to go into some detail around, well, what are the finances of their business, and actually understand why can't they afford to pay, and what plans can they kind of make. And I guess the won't pays, those debtors who always try it on, they have got really the perfect kind of excuse in terms of creating spurious disputes, because they know that it's going to be very, very difficult, depending on the sector you're in, to kind of get to the bottom of a dispute or untangle something that they're disputing, because maybe that person's been furloughed who you need to speak to get to the bottom of it. And we're seeing a lot more of kind of debtors using that as an excuse in terms of the won't pays, just to raise disputes.
So we did early on this. We did some collection strategies webinars early on, and one of the things that we've got is a matrix. If anybody looks back and wants to have details of it, a matrix of how to deal with can't pay, won't pay, based on where they sit on that scale. It was something that we created a while back for some international clients, but it's something that's there. If anybody wants it, just drop me a note about that. Okay,
and I think the depleted accounts departments has been a real issue. I mean, we kind of monitor on an hourly basis, the stats of our team in terms of, for them to see where they are during the day, number of attempted calls, number of connected calls, amount of time on the phone, actions within kind of the database in terms of accounts that they've actually touched, number of emails that they've sent, number of activities kind of falling due within the next 24, 48 hours, to give them kind of control of the workload in any given day. And since we've gone into lockdown, we've seen a 30% plus drop in connected calls to accounts departments. So it's very clear that many businesses weren't ready for this and are still struggling with having people work remotely. It's a logistical challenge for any of us, but I think many of the medium-sized companies just didn't have the resilience in place to be able to flip to home working, other than maybe the directors within their businesses. And when we are getting through to customers and the phone is connecting, probably another 30% are going through to voicemails. And the voicemail is a kind of recorded message saying the business is currently closed. Please email X, Y, and Z at the company, and we'll respond as soon as possible. So, businesses are, if you're cynical, using kind of COVID to hide behind in terms of avoiding that contact with certainly people who are calling them to collect money. I think when we are getting through, though, what has been encouraging, and it's kind of the more open conversations, is, and I think it's because people are at home and to some degree are feeling lonely, vulnerable, isolated, the conversations have been a lot more open and probably wide ranging. And I'd say, set us in very good stead for when we come out of lockdown, because we've built relationships now with these customers and debtors at a much deeper level, which means that we'll be able to kind of leverage those in a good way as we come out of lockdown and things return back to normal. So we've certainly found that whilst we're making or having less connected calls, certainly the length of those calls have increased as people want to kind of open up and talk a bit more about what the circumstances are that they find themselves in, or just have a general chat because they are they're a bit lonely kind of at home. What it's also meant at the same time, though, is a lot more requests for payment plans, which then increases the workload for the team in terms of having to set those plans up, monitor them, make sure that they're properly documented, and that everything's kind of in place to stay on top of them. But I'd be certainly interested in, I guess, everybody's kind of views on whether they're seeing something similar in terms of the level of connected calls and, I guess, conversations.
Yeah, and anybody got anything they want to mention on that one? Let's have a look. We've had a question here.
Yeah.
Hi, Charles.
Yeah, so thanks, Alex, so far. All good. We're seeing pretty much a similar thing. And I was on a call this morning with Simon Howell, And we were saying that, you know, any new credit applications going forward, aside from the international work that we do, from now on, is going to want to capture the best CRM content, which is going to be mobile numbers for the people that you're dealing with. Because that we've seen that if we have the mobile numbers, especially on overseas collections, it's a lot more effective. So all the little changes that we'll be making in time when we all get back to work, it's useful for these sessions to formulate that.
Yeah, completely agree. Completely agree, and it just brings back into focus all of the making sure that your GDPR and kind of that crossing that line from work telephone to mobile telephone and email addresses, etc. That, you know, you're fully compliant and on top of everything, I guess. Everything
and the growth in WhatsApp as well, and WeChat in China and stuff like that. So
yeah, well, certainly we've found from a origination point of view that we can't see, or we think there's going to be a lot less need to visit clients, to pitch to them, to provide credit management, because rather than pulling in people from various departments and different bits of the country to a meeting in central London to talk about their requirements, you know, Zoom or Teams is kind of more than adequate to have that initial pitch meeting. So, you know, you can save a lot, I guess, both sides, time and money, but still have a credible relationship building session with you know, with prospective clients. So I think lots of things will change.
There's a professional services firm that was on these, and they were talking that they don't need, that the only reason they have big offices and stuff in all the various cities is client meetings, which they don't necessarily need anymore. So, and they've also saved a lot of money in regional meetings and all that, with people traveling from one part of the country to another. So it's going to be very different. There was a question actually that that somebody raised, was that, let's just quickly ask it here. After lockdown, how long do you think the tail will be before we get back to some normality, Alex? That's a good question, isn't it?
In all honesty, I don't think we ever will get back to a normality that we had before. I think this will fundamentally change the psyche of who we are and how we do things. I really think it will be that deep, because we're going to springboard from lockdown to probably the deepest recession that we've ever seen, and then everybody's talking about a very sharp rebound, but you know, nobody's talking about it at the moment. We've still got to work out how we're going to trade post-Brexit as a nation and kind of a country. So we've got
good luck with that.
Plenty more hurdles to get over post-COVID, and you know, many of the health officials are saying COVID could be part of our daily life routine for decades to come. So
yeah. I mean, there's Massimo sitting there in Southern Ireland. Thanks for your comment. Yeah, good luck with that. Thanks, Massimo.
You're very welcome. The Republic is very happy these days not to be entangled in that conversation anymore.
Yeah. Just when you thought it was safe to go back in the water, Brexit comes and bites you in the arse. Yeah.
Chris, I'm conscious of time.
Yeah,
how
okay.
are we
Next slide.
doing in terms of?
Yeah, we always overrun, Alex. So
okay, fine. So
people can't stay on, they just drop off. So we're fine.
Okay, perfect. So legal cases. I think there's a lot of conjecture around the effectiveness of kind of going legal on debt at the moment. I think more than ever the courts were stretched pre-crisis, and you know, they're certainly very, very stretched now. So we rarely within our collections business go legal. 95% of our collections are pre-legal collections. It's really a very kind of last resort for us, and I think that will probably continue to be the case. And the feedback we're getting from kind of the specialist litigators is more than ever, you just have to make sure that your case is kind of watertight before you issue and take it in front of the judge. So you know, where the call may be marginal, or there's a chance the debt may be disputed, then you're going to be seen to be on very kind of sticky ground at the moment in terms of potentially wasting the court's time more than ever. So I think with a legal with any legal cases, just make sure that you've got your documentation all up together, and that you believe that there's a strong kind of claim in case there that can't be disputed. And obviously, depending on the industries you're working in, it may be that there's a moratorium on being able to issue some forms of legal action for a period of time anyway, while kind of the government is affording forbearance into certain sectors such as kind of commercial rents, and we've also seen it in kind of the utilities sector as well to some kind of consumers. So I guess we've touched on already the ethical moral dilemma. I mean, the crisis, as we saw on the headlines, it's brought out the worst and also the best in people since the beginning, in terms of the panic buying and just some of the attitudes that we've seen. I guess you can see that throughout the credit cycle as well, with some of the headlines that kind of we put up earlier, just the way some people have acted versus some others. And again, I just kind of hope that in time people will remember people who did the right thing, where they were able to kind of support the customers and the supply chains. I guess some sectors are getting paid quicker. I was on a call earlier in the week where certainly Vodafone have come out and have said that they will be they're now paying their customers within 15 days. So that's a huge kind of contraction in terms of credit terms, which is fantastic news to support their supply chain. But I think what we need to remember is that it feels almost like we're in the eye of the storm at the moment, and just things are going to get a lot worse as we come out of lockdown, as we start to kind of trade through the recession and come out the other side. Back to Atul's point, the level of SME insolvencies is going to be unprecedented. I think despite the government support, there's just going to be no end of kind of certainly SME insolvencies, but also I'd say that will extend into the vulnerable big names within the most touched sectors. We've already seen kind of Virgin Atlantic, I think kind of the aviation industry, and certainly anybody kind of supplying into that, as well as the tourism industry, are going to be huge casualties from the crisis. So I think things are going to get a lot worse before they get better, unfortunately. Chris, next slide, and I'll just kind of quickly whiz through some of the best practice that we've been trying to use ourselves, but also that we've seen other people kind of employing during the lockdown. So hopefully the early period of lockdown allowed kind of you as credit managers to make sure that firstly people could pick up the phone from home, that they could access systems, that somehow they could access the necessary supporting paperwork, hopefully electronically scanned, available to support the debt that they're chasing, as well as to give you some time to put some structures in place to keep the team together. That's been hugely important for us, is actually having a regular call with all the team and just make sure that people can get kind of anything off their chests and give them a time just to really talk to each other in a very kind of informal environment. That's been hugely important for our business. We're seeing the need to kind of monitor customer payment trends. Everything, and I think this has come up on several calls in the past, everything we see is kind of being driven by the data within the sales ledger at the moment. That's the thing which is, hopefully going to give you the early indications as to your customers which are potentially struggling. But I think we need to be adding to that data. Back to Charles's point, yeah, absolutely. Get those mobile telephone numbers. Make sure that we've got the email addresses for the key contacts of people that we need to be in touch with. But also, I think we probably need to add to the data we're capturing around why people are paying late. Do we have any kind of COVID dispute coding that we can add into our system so that we can easily flag those most vulnerable kind of debtors within our sales ledgers, to make sure that we can identify but also quantify the risk which is potentially within the sales ledger. Because certainly from me running my business and having 75 people depend on me day to day, one of the key things I need to know is who's going to pay when, so we can be forecasting the cash flow going forward. Do you want to take a question?
Sorry.
Pop up?
Apologies.
You're on mute, Chris.
Yeah, from Jason Braidwood from Credit Safe. Dutch, German, and Belgian offices emailed all of the customer contacts in the first 2 weeks to supply phone numbers for their offices if they were closed, and 85% success rate in getting different phone numbers, which is great. And Atoll, social distancing, there's been a price effect, especially in the industries such as aviation, etc. Yeah, indeed, yes, it's been. It certainly has. Okay. Yeah. Okay. Sorry. Go ahead, Alex.
So next, increase kind of contact during the period. I think more than ever, having credit controllers who can pick up the phone and build rapport with customers and have that human touch is one of your biggest assets. I think it's hugely important that the teams are making the effort to contact the customers. And I'd say if your sales teams and your customer services teams haven't been furloughed, then now is the time to kind of across company look at building better relationships between credit and those teams, especially to try and unwind some of the unresolved disputes that always sit on the ledger and potentially get older and older month by month. I think it's a real opportune time, while they're not out selling and maybe not dealing with as many kind of customer service requests coming through. If they've not been furloughed, leverage that resource, bring them into helping resolve the disputes, and I guess free up your team's time to be more proactively on the phone to customers, just to make sure that we're touching kind of as many contact points as possible. And again, other than telephone, use Zoom, use FaceTime. People, I think our experience is they appreciate seeing a friendly face at the moment. It can break up somebody's day and be hugely kind of beneficial. So payment plans, again, we're seeing more people request payment plans, and because of the companies we work for in terms of who we chase debt, we take instructions from them in terms of how they want us to treat their customers. And many of our banking customers and financial partners have basically said, if you're picking up the phone to recover money from an SME and they mention COVID, immediately give them until the end of June before you contact them again. So there's been a huge blanket amount of forbearance that the banks we're working for have pushed kind of down the line to us to say, look, make the call, but if somebody's showing any sign of financial distress because of COVID, then we're happy to give them until the end of June. So it's been interesting to see that dynamic, that certainly the mainstream banks seem to be very, very hot on making sure they're treating customers fairly and looking after customers who are potentially in financial distress. We, however, feel it could be storing the problem up for kind of further down the line when those customers face kind of multiple people chasing them for money. But again, we follow kind of the instructions that we're giving. But I think where you are offering payment plans to your own customer base, then they need to be documented, and there needs to be a really good record of them to make sure that the customers are adhering to them, and that if you're applying any statutory interest or late payment charges to them, that they're calculated kind of appropriately and properly for the payment plan period. I mentioned signposting. signposting earlier in terms of being able to challenge and also assist kind of debtors in terms of the resources available to them at the moment. And we're seeing, interestingly, more and more debt purchasers wanting to come into the market and look at buying old and delinquent debt. Again, it's quite early days for that, and not something that certainly the business to business sector's seen a huge amount of. It's been very prevalent in the consumer debt space, but I think that's going to be a growing area that we see. But it may be a solution for some businesses to be able to kind of sell some of the very, very old debt that they've not managed to collect in. But we've also seen some enlightened suppliers actually not only signpost customers to financial help, but also open up all of the internal resources in terms of employee well-being, especially around dealing with stress and mental health, which has been really interesting. The call I was on earlier in the week, Taylor Wimpey, the chief exec, was on, and they've launched this pay it forward scheme where they're paying in advance many of the self-employed contractors who can't get access to funding elsewhere. But something that really resonated was the fact they'd opened up all of the employee well-being resources to the third-party contractors because they just recognize how much stress those businesses being under cash flow can cause those owner managers. So I thought that was a really kind of important step that they'd made, and something that definitely encourage other people to do if you have the ability to share that with your customers. And then I think use just as many resources as you can at your disposal. I mean, obviously CICM is kind of leading the way in terms of sharing know-how, but just make sure that when you're looking at customers where you're thinking, does it stack up what they're telling me? The internet can obviously give you a really strong indication of, I guess, the noise that is being made about those customers in terms of level of complaints about them, whether their customers are returning goods to them. You can see that on lots of forums, and there's often just a red flag that if customers are telling you one story, you can just kind of sanity check it by what the wider population on the web are saying about that business in various forums and things. Chris, final slide. So what might the future look like? I kind of thought long and hard about this, and I've already kind of said it. I think it's going to look a lot worse before it gets better, and I'm typically an optimistic person. You have to be to run your own business, but I honestly think that we're really just at the beginning of this, and I know it feels like it's been a long haul already. I mean, I just can't believe how quick the weeks are going. Every Friday just seems to come around so much quicker.
Have you been climbing the walls behind you, Alex?
Yeah, literally. It keeps me sane, Charles. It's kind of guilty pleasure, but yeah, it helps. I mean, honestly, taking exercise, walking the dog, going for a run during this whole thing has been an absolute lifesaver. It really, really has. But we think there's going to be a fundamental shift in the way we need to assess how we give credit in the future. And I think talking to all of the invoice finance companies, I think it's a real dilemma that they're facing is, well, we used to know that we could advance 90% against this invoice for a business to give them working capital. But actually now we don't know how we value this invoice anymore because we don't know if it's going to be collectible. But I think it's got some real wide-ranging kind of implications at all. Increase in fraud scams.
That's a really good question from Atul.
We haven't seen an increase yet directly, but I fear it's just hiding there, waiting to come home to roost. I'm hugely cynical of the criteria that have been wrapped around the bounce back funding that's available. So the kind of instant funding of up to £50,000 for businesses. I think the banks unfairly have been criticised for the lack of lending that they've been putting out to market, because they've been, as we would when we give credit to somebody, making a fair credit assessment of whether the business can afford to repay that money in the future. And yes, there's been issues around distribution and it happening quick enough because they've been inundated with applications, but simply to allow businesses which are able to tick several boxes and receive £50,000 by way of an interest-free loan, I think is kind of opening Pandora's box, and it's going to be hugely interesting in 12 months, 24 months time, just to see the level of credit defaults on those loans. So I think there's going to be a change in the way we assess risk. I also think there's going to be a huge change in the way the emphasis of credit departments, and I think more and more they're going to become data driven and AI driven in terms of crunching the numbers behind the sales ledger. But I hope at the same time it's used in a proactive way to allow our credit controllers to have more time building relationships with customers on the phone. I think that's the best mix of kind of using data technology just to really leverage the amount of time that we can spend building those relationships.
Yeah, there's another question from Jason there talking about are you seeing organisations extending out payment terms and pushing out their dunning cycles, etc. as well? I mean, certainly from the conversations that we've had, it's generally by sector. People are looking at the sector and seeing whether that's one that's been impacted and then changing the dunning cycles potentially based on that sector. Like, for example, the hospitality business. And we've got one client is a local government, and they are looking at changing the way in which they're operating in terms of, well, we know that the schools and colleges are going to come back first, so we're probably going to start focusing on that area to start chasing them. And then the ones that are coming back afterwards, like the pubs and clubs, those ones we're going to be leaving for a little bit while longer. So they're extending and changing the payment schedules and the collections strategies based on the industry they're in and the perceived impact they're having. Is that a similar sort of thing for you, Alex?
Yeah, absolutely. And I think it comes down to knowing the sensitivities of each of your customers and where they sit and what sectors they're in. But certainly people where they can are exercising more forbearance than we've seen. What's that? Charles had £50 in his pocket, and Charles,
what's he going on about?
I don't know. But one thing that the invoice discounters have done to support their client base, and certainly this has been led by a number of the main banks, is normally they would recourse a debt to the client after 90 or 120 days. So if the debtor hasn't paid in that period of time, it basically has to go back to the client, and that reduces their funding that's then available to them. We've seen them push out pretty much wholesale to 150 days. So they've really tried to support their customer bases by allowing them just that much more time before they get penalised for not having collected in the debt from invoice finance. We also think that there's probably going to be more pro forma sales and personal guarantees as a result of people feeling uneasy about extending credit and not knowing whether somebody's a safe credit bet. So certainly between or selling into SMEs where you can't get a clear credit picture, we see there's going to be a huge increase in the use of PGs. And I guess one final kind of comment is around open banking. Just thinking about it, and I know some of the credit referencing agencies are using open banking to power some of the credit algorithms, but as a credit kind of in a credit world, if we could have that window a view into an SME's bank, we would actually be able to see the complete working capital cycle in terms of ins and outs into their accounts. And obviously, there hasn't been a huge uptake of open banking yet, but the technology now does exist to allow us to kind of link in directly to our customers' bank accounts. And I just kind of think that over a period of time, we might move more towards, well, we can afford to give you more credit, but you need to give us a view into your sort of working capital.
I had a contact with the guys at Experian last week actually, and they were talking about, they wanted to come on this session or these sessions to talk about open banking, and I said, to be honest, I said, I think it's a little bit too soon. I said, what people really want is, how are you going to adjust your scores for impact of COVID first? Once you've done that, and then coming out of this and starting to trade out of it, then I think open banking would be more interesting to your average credit manager. I said, right now, I think it's a bit too soon. So they're working, as Graydon's are and others, on these impact scores. And certainly Dan Hancock and Co-Credo mentioned that when he was on the call a couple of weeks back.
Yeah, and we've certainly had feedback from CreditSafe that they're looking to overlay COVID impact on their algorithm and kind of sector scores to try and give a representation of that. So I think just to sum up, collecting money has never been easy. It's just got a lot harder. But I think if it hasn't already, hopefully it's put within your organization kind of, I guess, credit management, hopefully much higher up the awareness chain in terms of where it should be, because it's controlling the lifeblood of the business. And if it's not kind of, one of the most important, roles within the companies that you work for, hopefully it's kind of becoming so. So, hopefully there'll be some good news for credit management, I guess, as an industry coming out of this, in terms of just really realizing how vital it is to kind of keeping businesses going and kind of cash flowing.
Okay, well, thank you very much indeed, Alex. It's been a pleasure having you on. Thanks for your time and putting this together. We have run out of time, as we always do on these sessions. If anybody has any questions, then please, if you can ping them to CICMQ at CICM.com if I can't answer them, and I'll certainly ping them over to Alex and he can do that. Copy of the slides will be available to everybody after this session. I'm just going to stop the recording now. So thanks very much, Alex. We'll carry on talking afterwards.